Testing, 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 testing. 1, 2, 3, 1, 2, 3. Seems like the mic is working fine. Okay. Yeah. How is everyone doing? Recently, because of the tariff things, everything goes down. And this is one of the very significant events that happen not very often. And I have seen a lot of videos that talking about the tariff, and this is what I'm feeling surprised with it, because it seems like many people don't know what is the tariff, and the things that is the China government that is paying the things, the cash, the money. But actually this is not how it works. And before we going into the DCA things, I wonder if you guys interested on the tariff thing or not. And today it seems like there's some response from many countries, and they have a different standpoint. Meanwhile, from my point of view, it seems like only China is the one that is standing firm to fight until the end, while the others seems like it's in between of the neutral attitudes and the compromise attitude there. So, um, which mean for myself, from my point of view, I think that at least Trump move in this tariff did make a success, because he's actually betting on either the other country will compromise with him or not. So it seems like he get what he want. Everyone is trying to compromise and then trying to just fulfill what Trump is looking for. Meanwhile, only China is the one that is still revenging on the tariff. So yeah. But from my point of view, I think that in this case, the calculation on the tariff seems very childish, and is ignoring a lot of variables, because it's taking the percentage that is calculated by using the trade deficit with the other country divided by the US import from the other country. So it means that it means that he's actually not calculating what the other government is charging, but he's calculating how much money is the other country is making from them. So let me give you a very brief example. So let's say that Americans buy some things from China, and if he's paying like $4. Meanwhile, no, he's paying like $10 for everything, for the whole package of what he bought. And then meanwhile, the other China man is buying things from Americans, and then he just bought a total sum of $4. So this is how Trump's calculation works. He think it this way, because the American pay more than the Chinaman. So Chinaman is actually making profit from the Americans. But this is, from my point of view, this is all demand and supply, because China think it's cheaper, and it's having a better value in comparing to the price. So this is why the American have a higher demand on the China goods. So even though China make money, it makes sense. So but what American want is that, first of all, you want to be the first dominating force in the stock market in the world. Meanwhile, he also wants to make money from all of the country around. And this actually doesn't just work together, because why the people in America keep on buying things from the other country is because their currency is cheaper. I mean, the other country currency is cheaper. So this is why they're trying to buy things which is a cheaper value price from the other country. So a cheaper rate in the currency will increase the demand. Meanwhile, if you want to become a dominant place in the world, your currency value cannot be relatively low when comparing to the other country, because your value, your currency, need to have enough value to hold by the other governments or the others company. So you want the others to hold your currency, to keep your currency, meanwhile keep on buying things from you, which is at a relatively high price. I mean, this is a very difficult things to do so. So this is this is actually what I see from Trump action, what he want. He want to be dominant. So he want to keep the currency value at a higher price. Meanwhile, he also wants to make the other country around to buy things from him. So this is how it is. Meanwhile, there's actually a solutions to the tariff, which actually all the country around can just bond together, bind together to stand firm on fighting until the end. So they can just form a alliance, and then they can just try to boycott America and from doing the international trades. Meanwhile, it seems like based on the response solely, you can see that only China is the one that is standing firm, and the other country already compromised. And this is actually a very difficult thing to do so, because when the alliance involves many parties, it will become very difficult to achieve a point which you can balance balance everyone and beneficial and everyone. So it's very difficult, and it seems like they don't intend to do so. They don't try to. If they do make a success in this move, which they bond together and boycott America, and you will find that America will no longer in the dominant place, and he will just maybe become a second place or a third place. Meanwhile, I believe that the Middle East will become the first place. But based on what is progressing right now, it seems like America is still the greatest country ever. Meanwhile, he's trying to just get all of the body compromised to him, and he worked. So this very risky strategy did come up with a very good result to America stock market. So but there's still things to be aware of, is that since China is the one that will fight until the end, so you can be paying more attention on the manufacturers, on agriculture, and also on the electric components, which is the main import from China. So now, since US and China are fighting together, so US will no longer buy things from China, and he was trying to just make his own local manufacturers to supply the demand, supply the local demand. And actually, you can just pay attention to the raw components, I would say. So I do research on that, and I find out that there's actually many stocks you can pay attention to. Maybe I'll just list out a bit, and if you want the table, maybe you can just come to approach me at the end, and then I will send you privately. Okay. Let me just check on the research that I have done. Wait a second. It seems like my computer get to lag a bit. And after that, we will go into the title of today, which is the DCA. So sorry for taking your time on the tariff things, but I want to keep you guys updated, and then maybe just give you guys a little bit of the list to what you need to pay attention to. Yeah, the internet is very bad. Okay, first of all, the stock that you can pay attention to is the first one, Hans brand, the clothing brand, and then the Temple Sealy, which is the making the bed, is the manufacturer that make the bed, and Meta, the company that is making doors. Okay. Afterwards, you can pay attention to CF Industry and Corteva, Down Industry, and Stanley Black and Decker, Masco, Trend, something like that. Meanwhile, you need to pay. This is the stock that you can pay attention to, which I'm saying that you can accumulate your positions, or making a long position at somewhere that you feel comfortable with. Meanwhile, there is some stock that you can make buy a put, or maybe you can just sell at a higher price, which have a bearish effect, which is Apple, Intel, AMD, Nvidia, Tesla. This is because of the China is still the largest communication electric components manufacturers. So this is the company that will get affected by the tariff war. Apple, Tesla, which is mostly the tech company. And then there's also the First Solar, the Tesla Energy, and Face. This is the company that having a very high demands from China goods. So the First Solar, Tesla Energy, and Face. And Face is also the one that is in my watch list, because when everyone is dropping, this one is still standing firm. So I believe that it will follow the trend later on, and then we will just drop accordingly. So yeah, that is mostly of them, and maybe you can just do your little research on that. So let's get back to the topic of DCA. So my point of view, from the macroeconomic point of view, I do believe that the bear market will still be in place for about sometimes. If you check on the trendings from the historical results, you will see that actually the bull market will take place for 4 years. Meanwhile, the bear market usually will take place for 1.5 years, except there's a outlier case which it lasts for 3 years. Okay. So if you do believe that now is still in a bullish market, then ignore what I say. But I believe that the market structure had been switched from a bullish market to a bearish market. Meanwhile, many people is buying the stock at a very high price and then having their position underwater. So if the market just getting to have a shift of structure recently, then it will going to sustain for quite some times. And this is what you can do when the market is filled with blood, So when many people is losing money, this is what you can do, which is DCA. So you can just keep on buying the stock that you're looking for, or the ETF, or the index, whatever you like. So keep on buying it until it recover back to your place, to your entry, and then keep on buying it to stack your positions over and over again. And then this is going to be a long-term play. So in a daily situation, you can just ignore your position, let it to play along with the time and the upcoming bull trend in maybe next few years. So I do believe that based on the current situations, America will become great again. So, but not in the recent terms. It is going to be it's going to take some time to recover from the market, and maybe a consolidations at the bottom first. And we don't see it for now. Everything is still dropping very sharply, and yeah, if you want to just pick up your desired stock or your desired asset now, you can do so. But actually, I would recommend you to put a smaller position instead. And then afterwards, maybe you can wait until it consolidate at the bottom. Then you start to putting more and more. And even if it have a rebound from the current positions, now, I don't know if you do heard about the terms, which is dead cat rebounding. So there's a term like that, and this is what I believe it rebounds from the current place. So if it do rebounds, I believe that this is just a very small chances for you to escape your underwater position. Meanwhile, it will continue to drop afterwards. Since the historical result proves that the bear market usually will last for 1.5 years in average, and it's just getting started. Okay, so no longer miss the next bull run. This is how you do the DCA. So in the normal day life, you just work for work for your job, and then you can just keep on to just take a little bit portions from your salary and then put it into the stock market and buying your desired stock or your desired assets until the next bull run started. Okay. So this is also just some research that have been done previously, which means the longer term investment actually will run better when comparing to a short-term trader or short-term investor. So for example, the S&P 500 average 7 to 10%, but this is based on the research that have been done by the others. Meanwhile, for me personally, I will see that S&P 500 in the last 10 years is actually ranging around 9 to 13%, which is quite good. But if you do start to picking up at the downtrend instead of just picking up in the uptrend, then your percentage might be a little bit bigger when comparing to this one. So if you just go back to research on the previous downtrend, and if you are picking up at that time, then your average return per annum will become 18%, something like that. Around 18 to 23.8%, if I'm not mistaken. Okay. So according to the study done by Daba Incorporate, so the long-term investor typically just outperform the market traders or even many mutual funds manager due to low transaction cost and reduced sentiment bias. So you just have to understand about the market cycle. Then you can just participate according to what is the current stage. Then leave it to save your cost, to prevent any mistake that you have been done, like exit earlier and then you will just miss the next bull run. So even though you just leave it, it will still perform better when comparing to the mutual fund manager. How ridiculous it is, since they have been putting so many money in doing their in studying and pursuing their career, then their performance will just worse when you're comparing to the buy and hold diamond hand. So if you are going to frequently trading, you can see that around 80 to 90% of them are losing money. About 10% are able to make a consistent profit. Meanwhile, only 1% are profitable after 5 years of active trading. So you can see that the percentage of success is very low. And so just trying to make your life easier to generate a lot more wealth for yourself, I would recommend you to DCA instead. And I already give you the list to be paying attention to, which will be benefit from the tariff war. Okay. So why a longer term investing have a better chance of winning than trading? First of all, lower transaction cost, lower trading cost, because when you get into the position or you get out of the position, you have to pay some fees to the platform. Okay. And then, meanwhile, when you are going to do a long-term investing, you are going to have a higher risk to reward ratio. Meanwhile, you can just hold for the whole trend instead of just riding at the middle. So this is the benefit, the compound returns. Meanwhile, if you are just keep on DCA, which means you are going to put a certain amount from your salary into the stock market, months by months, years by years, then you will see a compound return. Why? It's because the previous position that you have been stacked will keep on generate you the dividends. And then the dividends will become a free cash flow to you to just maybe stack another positions again, or you can just participate another opportunity. So this, when this kind of dividends, it keep on providing you more cash flow, the free cash flow that you can manipulate, then you can just keep on to just stack into the same positions to compound the returns. The larger the positions, the larger the dividend that you get. And then you can also reduce stress due to daily market fluctuations. Because if you are going to be a short-term trader or you are having a very high leverage positions, then in this case, when the market is giving down and then dropping, you might have the problem to fall asleep at night. When you are closing your eyes, when you are trying to get to sleep, you just keep on thinking about your portfolio, your positions, and the image of the chart will just keep on disturbing your sleep. And this is very bad to your mental health and your body. So there's no time, there's no need to time the market. We don't try to guess the bottom. So in the trade, even is trading or investing, I will not recommend you to predict what happened next. We only respond to the market itself. So even though we have to predict what is going to happen, but we will not make the action, the trading and investment decisions based on that. We will wait until the market is response to what you predict, then you only take place into the market. So we don't try to catch the bottom. Meanwhile, we are waiting for a confirmation, which is a signal, then we only get in. So even though we don't catch the lowest bottom, we are able to enter our positions at a very relatively safe place comparing to the previous one. Okay. So why stock and ETF? Diversifications and the dividend income and capital appreciations. So actually banking industry is also quite nice. So since in due to the current situations, I believe that first of all, banking industry will still stand strong. It will recover if the market get to recover now, banking industry must be the first one that respond. Second, manufacturers. Because of the tariff war, the local will have higher demands on the local manufacturers. So these two is what you can pay attention to. Meanwhile, I would not recommend you to go into the tech industry because technology nowadays is different comparing to the old generation, the previous years. Because in the previous year, we only price in we only price in the thing into the price when there's new inventions happen, released to the market, launching. Meanwhile, you can see that a lot of things happen now is purely based on dream or purely based on what they're expecting to happen. And there's still no sign of the launching and of the innovations. So I do remember in my primary school when the teacher talking about what will happen in 2025, the textbook is showing the picture, maybe a neon city with a flying cars and something like that, and there's drawn to just sending your parcel all around. But now we are in 2025. Did you see any of that happen? At least I don't see a flying car, and at least I don't see what we call a projected phone. We are still having a physical phone. So you can see that the reality get to off track with what we have imagined, what we have expected. So even though this is going to happen, but I believe that it will take longer than what we think. So I don't recommend you to go into the tech industry because nowadays the tech industry already priced in a lot of dream by the market, by the market analysts, by the retail investor and the founders. So banking industry and also the manufacturers is the one that you can pay attention to. And if you're lazy, don't want to go to the respective stock, I would recommend you to go to ETF like S&P 500. Annual income of 9% to 13%, I believe is not bad. At least you get to keep your capital safe. Okay. So yeah, this is the example of you buying a dividend stock, and the dividend will keep on just giving you a compounding effect. So yeah, so if you buy a $1 per share for a dividend of 2 cents, then when the stock price rise to $2, your capital appreciation will be double, 100%. And the dividend per share will go to 0.04, which is 4 cents. So whenever the share price is going higher, your dividend is also going to be higher. And when you get the dividend, keep on stacking all the positions to having a higher capital appreciation and a higher dividend yield. Very simple mathematics. So it's just like a property investment plan. Buy a property, rent to the others. When the property value is going to increase afterwards, sell the property, or you can just keep on holding it. And then whenever you have the rental collected, you can buy another property instead. This is how you flip your assets. This is how you flip your net worth. So from one property become two property, become four property. So this is the principle for long-term investment. First of all, start earlier. The earlier that you start, the earlier that you get success and achieve a financial freedom. Second, diversification. Don't put all the eggs in the one basket. So if you do put all your capital in Tesla and Nvidia for now, because many people are buying Tesla and Nvidia at a relatively higher price. So if that is the case, then you will just, your whole life saving will just be gone. Or maybe just cut half, And third point, be patient. So let's go back to the second point, diversifications. Actually, this is what I recommend you to do. Instead of one specific stock, go to the ETF. And there's what we call an industry ETF also. So if you are very interested in the banking industry, go to that industry ETF instead of one particular bank stock. So if that particular bank stock go to bankrupt, then at least you still have the others covered. You won't hurt your portfolio that much, okay? And the third point, be patient. Since a long-term investment is a long-term game, so you will need to keep on invest, put it back into your position until one day you can really quit the market and enjoy life. So this is a very long-term investment plan. And next is reinvest the dividends. So this one is actually optional. If you reinvest the dividend, then you get to compound your position a little bit faster. But if you want to just cash out the dividend and then have a little bit of enjoy of your life, then I think it's not a bad idea also. Sometimes we need some sugars on the way to make us able to hold until the end. And last of all, be consistent. Before you get into a long-term investment plan, before you put in your first amount of money, you are at your most rational mind. So when you have the plan already, stick into the plan. Don't change your plan halfway through, okay? Because if you start to put your money into your plan, according to a plan, you start to have a certain position in your account. The price fluctuations will affect your emotions to make some ridiculous decisions. So believe yourself, believe yourself, which is the one that is making decisions before putting the first batch of money. And this is the research tool that you can use, and which is the market data and news, financial report, and the fundamental analysis. But nowadays, maybe you can use AI instead. And there's ChatGPT, Cloud, and then Gemini, and then also Perplexity. This is DeepSeek. This is what you can use to just collect this kind of information instead of just going through it one by one. So among all of them, I will recommend you to use Perplexity instead when you're comparing to the others, because it get to collect the latest information. Meanwhile, the others don't. But if you do have the membership, you have money to buy a membership, then ignore what I say. So if you are just going to use a free version, then Perplexity, I believe, is the better one when you're comparing to the others. Meanwhile, Perplexity also able to collect different kind of information, like the market sentiment from the social media, all the research paper, all the news. So you get to select what kind of information that you want, instead of when you are using the others, you are not able to choose the source of the information that you are looking for. So what is the stock and the ETF that worth for a try, which is the top tier company, and it requires economic mode. And second is the ETF, and you will try to avoid a cyclical industry. What we mean by cyclical industry is, for example, alcohol industry. when every time when it happened every time in New Year, when the New Year has come, and then you can see that the alcohol industry will get to the share price get to rise a bit, and afterward it will just drop. So when there's a festival, the alcohol demand will become higher. It will drive the share price, and afterward it get back to the normal level. So does the share price. So this is what we call a cyclical industry, and also this apply the same to some kind of the industry that affected by travel seasons. Okay, so you can just pay attention to it. So when there's no specific season or specific sentiment to drive the cyclical industry, actually they will just kind to get into a ranging zone instead. So yeah, this is the what we call DCA. DCA is actually dollar cost averaging. It's very simple, just like let's get to the chart. So this is the chart of gold and in previous year 2021 until 2025. So when it's dropping, if you keep on buying it, every month, then you get to collect a lot of positions at the bottom. And whenever it rise, now you are already in a crazy profit since gold already surplus 3,000. And this is actually what I do. I keep on to collect gold instead of the ETF. Gold always have value, but now actually I don't think it's a good idea, because if you check on the chart of the weekly chart, this is the first red candle ever. So I believe that we will start to just going down a little bit. So this is in beginning stage of the shift of structure. So now it's not a very good timing to start your DCA. But if you want to start now, you can put a smaller position instead. And then this one is the next tag 100 mini. So when it's dropping crazily, a negative 38%, and you keep on buying it. So when Nasdaq is still there, America is still the greatest world ever, the market will come back eventually afterwards. This is what happened in the last big drop, I would say, 38%. So you can see in early 2022, it start to drop, and then it dropped until early 2023. It take 1 year for the bear market to run. Afterward, it start to going up. So now, is it a good timing to start your dollar cost averaging? Maybe it's around here, I would say. It's dropping at the beginning stage. If you consider about the time effects. So there's two types of the dollar cost averaging that you can pay attention to. The one is a fixed one, which means I'm going to just buy on the same value. Like I just keep on buying $100 of share, $100 of share every month. Or I can just doing a flexible one, which means at the higher position, I buy for a smaller lot, a smaller share size. Afterwards, when it drop more, I start to put in more money. So it drop even more, I put in even more money. So there's a pros and cons for every one of them. Personally, I would prefer the fixed one, because you never know where is the bottom. And if you go to the flexible one, I don't have the confidence that I can still buy on a larger position at the bottom. So I actually will be more comfortable with a fixed DCA plan. So this is the market structures. And you can see what is happening right now is that if you compare to the QQQ chart, the S&P chart, and you can see that it is actually dropping here at this kind of slope chain, slope chart. Okay, so it's halfway here. Whenever you get back to where it should be, where the valuation should be, then it's the time for you to put in a larger amount. So for now, it's still here at the fear zone, okay? And if you want to just start the DCA, actually you can do it through Usmart though. Usmart, there's a plan for you to do the DCA, and you can just click on the button, do the DCA. Afterward, you can just ignore it. So it's very simple. Let's say you go to the SPY, and then down here you can see that in the second icon here, there's actually a plan for DCA. Then you can just keep on to set your desired settings, and afterwards you can just it will help you to buy instead of you having a manual operations. So this is, if you have any question in how to set up your own DCA plan using Usmart, you can just contact your manager, and this is where you can find it. At the apps, at the bottom there, there's an icon called Me. Click it, and then you can find your desired manager's contact. Or you can look for me too. This is on the left, this is my Telegram. On the right, this is my VCom. And if you are going to add me using Telegram, use the left one. If you are going to add me with WeChat, go for the right one. Okay. So if you have any questions, you can just feel free to come to me, and then we can just talk about it. And this is all for today's. So yeah. Do you guys have any more questions? If you don't, then maybe we'll just end for today, and then let's see, there's a question where we can watch. There's a question from Edwin Glass, where we can watch video on how to fund our account in Usmart. Okay, so if you want to watch the video of this recording, you mean this recording? Because we have actually in Usmart, we have two apps. One is for Singapore global version. One is for the Hong Kong version. And the recording is only available at the Hong Kong app due to some compliance issue. So if you download the Hong Kong apps, then you can watch the recording there. Or you can also pay attention to YouTube, because Usmart actually have a YouTube channel, and you can search Usmart option, something like that, and you can find me there. You can find my video there. But from what I've been told, maybe the live streaming, this kind of education services might going to be an end. So so I will actually, if you want to just contact me afterwards, I will recommend you to just add my Telegram instead, because I'm not so sure whether I will still be here or not. Okay. And if you want to find out how to fund your account in Usmart, you can just contact, once you download the apps, you can just find your the manager contact there, and then you can just contact your manager, and they will guide you step by step. So if you have any question in investing and trading, then you can come to me. Or if you have any question in the settings and at the buttons there, then you can go to your manager. Here. So if there's no more questions, then this is the end for our sessions. And thank you guys for your joining, and hope you guys can make quite a good fortunes in the tarot thing. Because if you do join for our previous live sessions, and we do talk about them, it's going to become very easy. We have been talking about it since January. So we have giving out a lot of, you know, we already catch the top of the Tesla. We enter a short position at Tesla, when it's at the bottom and it's having the first shape of structure and then at the resistance. Afterward, we also catch about Google's, Apple's, what else again? Yeah, also QCOM. So this is what we have been caught, and then we already make quite a good fortune from it. And for me personally, actually, all of my bear position roughly already take profit, quite a lot of them, around, actually most of them already in profit. So I'm empty hand now. But even I'm in empty hand now, I am not able to find any specific asset to invest into. I'm actually still waiting for the macroeconomic to have a very firm standing point before I get into it. Because even though you are very good at the fundamental uh, analysis or even a technical analysis, all of these things will go wrong when there's a huge macroeconomic events happen. So this kind of huge macroeconomic event will disrupt all of the calculation, all of your analysis, and also all of your valuations. So nowadays, I want to just keep my hand empty until, but I will just put some into my watch list, which is the one that I'm suggesting you guys. So yeah, so we will see how it goes. And if we do have a dead cat rebounding, then I'm going to pick up some put options to short them at a very high, at a relatively high price comparing to a current price. So that's what I'm looking for. Okay, thank you guys for joining and hope you guys have a wonderful night. Thank you.